Well, good afternoon, and thank you for attending. I do apologize for the delay. My name is Jason Allen, and I'll be your presenter this afternoon. I'm the Regional Sales Director at Capitale here in Mississauga. Today's topic is the importance of salary. We're going to have a very detailed overview. I'm going to talk about our disability product, our simplified accident product, and our disability income rider, 3 different products. However, the product is a wonderful thing, and we do need to discern which product is appropriate, but I like to start by identifying the need for disability and helping us initiate some of those conversations and where it fits in the portfolio. I'm going to try and move through that fairly quickly, but I am recording the presentation, so I'm happy to provide a copy to everyone in attendance. Okay. To get started, I want to talk about the ABCs of insurance. The ABCs of insurance are very simple. We've got disability, we have critical illness, and we have death. There's simple coverage, simple overview. When we talk about disability, we would really prefer to discuss it as income protection. We've got income is a very important function. It's what makes all of our lives continue. We work so that we can continue to enjoy the regular day-to-day activities. And our income should be protected. Most of our clients will state their income is protected through group insurance or individual insurance. Group insurance, although our clients indicate that they all have it, only about 30% of Canadians do. 75 to 90% of Canadians will tell you they have group insurance. It's worth reviewing their insurance to try and help ensure they do have what they think they do. I'm going to go through this a little bit quickly, but the insurance is there, and the reason we need to have it is to guarantee, verify, and ensure that the expenses that continue that come out of your bank account every month will have some money going into the account to cover those expenses so that you can stay in your home. I'd like to do a quick overview on CI as well, because people frequently compare disability with critical illness. There's 25 specific definitions under critical illness, whereas disability pays in event of accident or sickness from any cause whatsoever. DI is a great product. It does provide a lump sum amount. That lump sum amount can be quite substantial depending on the size of your policy. Disability will pay an ongoing amount. On a very short claim, CI might be beneficial because it's the same amount no matter what. But if your claim is 10, 15, 20 years long, it's quite likely you'll run out of income from your critical illness product. Having said that, critical illness does still have its place, and its place is to help cover additional expenses not covered. Things like prescription drugs, home care, your spouse's salary so that they can take time off work as well, best doctors, any number of different things. In addition, we have death. Death is the last risk, and the one that most of us talk about first with our clients. Quite simply, when we talk about death, we talk about life insurance because no one wants to talk about death insurance. When we talk about death, we talk about covering it in a couple of different ways. Term. Term insurance is the cheapest and easiest way to get a client on board, to get people to start looking at it because it's expensive. Well, it's also unlikely to pay. Only about 4% of term 10 plans actually ever pay a claim, and only about 7% of T20 plans pay a claim. Because of this fact, these products are quite inexpensive. They're designed to expire before your client does. By contrast, we have permanent insurance, which will pay out unless your client cancels the policy for some reason. The claim is going to pay. It's a very high likelihood of claim. As such, it's a much higher cost. We've got an overview. I illustrate 3 houses because when it comes to disability, the reason people don't talk about it is when I talk about DI or CI, my clients say it's not going to happen to me. The odds are 1 in 3 that you will be diagnosed with a critical illness or disability. Actually, the odds are 1 in 3 of a disability, quite simply. Prior to the age of 65, a disability lasting more than 90 days, your odds are 1 in 3. There's 3 houses on the screen. If you were to live in the middle house and I were to speak to you, you'd say, well, that's fine. It's going to happen to my neighbor on my left or my neighbor on my right. The problem is both of those neighbors are pointing at you. They're saying exactly the same thing because they don't want to admit that it could happen to them either. That's the problem with living benefits products. No one wants to admit the possibility that they could need them. I've got a picture of a printer on the screen, and this is a little bit awkward sometimes. But the simple statement is, if anyone in the room had a printer that printed money, it's probably one of the very few things we would absolutely buy insurance for. We would love to insure it if we were to go into Best Buy or one of these stores and purchase this piece of electronics. We would absolutely take the warranty on it, regardless of whether we do on other things. And the reason is if it prints money on an ongoing basis, I want that printer to be able to print 24/7 without delay, without stopping. I want to have as much money as possible coming in. The reality is your clients, and maybe some of you in the room, don't realize that we are in fact a printer that prints money. As long as we are able to work, we are able to earn a living. If we're broken, that income stops. If you would insure the printer that prints money, why haven't we insured ourselves, the printer that prints money? The goose or the golden egg. Very simple story. It's from Jack and the Beanstalk. There's a golden goose there, the goose that lays golden eggs. If we had a goose that laid golden eggs, which would we want to insure? The goose that lays the eggs, lays a golden egg every day, or the eggs that have already been laid? If we could only pick one. Those of us that truly believe in insurance would like to insure both, because I have the value of the golden egg that already exists, but the far more valuable goose that can continue to replicate those eggs. The reality is if I had to choose one, it would be the goose, because the goose can always lay me more eggs. Unfortunately, our clients insure their home, their car, their jewelry, their art. They insure the eggs, but they don't insure themselves, the person who is able to obtain all of those assets through their regular day-to-day activities. We want to show our clients that the importance is in insuring the goose, not the eggs. Here's 2 jobs. Simple overview for your clients, make life very easy. We've got scenario A is a $48,000 a year income when you're working, and if you're disabled, you're sick or injured, you receive no money. How long could you sustain your lifestyle without any income? Scenario B is an alternative. You could take $47,000 a year when you're working and $33,000 net of all taxes should you be disabled. I think most of us would select scenario B because we believe your income, your ability to earn an income should be protected. The reality is, scenario A to scenario B is scenario A with an individual disability product acquired. It's a very simple overview. I mentioned the odds are 1 in 3, but it's not just 1 in 3. It's 1 in 3 prior to the age of 65. Or it's 1 in 3 people under the age will be diagnosed with a disability under the age of 65. But 1 in 3 is not the most important number there. The reality is what's important is the duration. This is 1 in 3 people will have a disability lasting at least 90 days. The really unfortunate portion is that that disability will last on average 2.9 years. Most of our clients can get through a few days, maybe a couple of weeks. It's month 3, month 4, month 5, month 12, month 17, month 23, month 31, when we've exhausted our assets. This is where disability insurance is so important. I understand everyone's salary is challenging. Our salary is basically this wonderful balancing act where our income comes in and we try to balance the budget or balance the bills. People wait for payday to buy groceries because they don't have enough money. Or I guess my favorite statement is there's too much month left at the end of the money. They have bills, your regular bills, your hydro, your gas. To be honest, your insurance, your investments are monthly expenses that you're budgeting for that come in the form of a letter or a notice. You've got your hangar or your niceties, your entertainment. This could be your dry cleaning, it could be your shopping, it could be you're going to a movie, your dinner out, your new iPhone. The reality is people don't always budget for those things, but all of our clients that say they can't afford to do things, most of them have the newest iPhone or Android. They've seen a movie recently, they've gone out for dinner in the last week or two. It's all a matter of what we believe is necessary and what we try to find the money for. Our cars are generally a fairly high expense on our list. You've got your cars, you've got your insurance, and your home. These are the things that all of our clients are trying to balance. There's many other things that might be there for some, but virtually everyone has this list. And they're all balanced precariously on your client's income. The challenge with this is what happens if their income stops. If that bottom block gets kicked, all their expenses, everything they do, all their finances come crumbling down around them. And people aren't prepared for it. Your clients that say they can't afford disability insurance are the clients that need it most because they can't afford not to have disability insurance. What they don't want is they don't believe they need disability insurance. They don't believe it's valuable. So we need to highlight the value. I'm going to go through this briefly, but let's look at a client. We've got a 40-year-old male because that seems to be the age of every client ever used in an example in the world of insurance. We're going to take a look at our client, and we're going to ask about their home. Now, I do this presentation nationally, so in some markets this number might be high, and in some markets it is a little bit low. But if we take an average value of a $600,000 home, if that's high, we can lower it. Ask your client what the value of their home is. We get the number, whatever it is. Next statement is, what do we pay for home insurance? We're trying to put an understanding of what costs are. So if I have a $600,000 home, find insurance is about $1,000 a year. We find most of our clients have 2 cars in the driveway. If we look at 2 cars in the driveway, the approximate combined value is about $35,000. If we continue this story along, what do we pay for car insurance? The car insurance is on average about $2,000 a year. Now your numbers might be higher, your numbers might be lower, your client's numbers might be different, and that's okay. Use your client's actual numbers, because what we want to understand here is the items I'm illustrating are the eggs from my earlier example. If our average client is earning $50,000 a year, we have a retirement of it at age 65. That's 25 years from now. 25 years from now at $50,000 a year is an income of $1.25 million. This is the goose. If we're paying approximately $3,000 a year to insure $630,000 eggs, what would be a reasonable cost to insure a $1.25 million goose? This is a simple overview for your client, and when your client fills in this number, it's what helps sell the disability product. In my example, it would stand to reason it would be about $6,000 a year or $500 a month. And our clients are going to say, but there's no reason I'm going to pay that. That's far too much money. I'm not interested. And your simple statement is, okay, what would you be willing to pay to cover that type of need? And they'll try to lowball you and offer you something like $1,000, $1,500, something in that range. At which point, you can tell them we are able to protect this client for as little as $1,100 a month. So what are the coverages that your clients have? Once we've eliminated the expense as the primary objection, our clients are going to come up with other objections. Things like, I have employment insurance. I'm in Canada, I work for somebody, I have EI, I pay into it every month. No problem, that's fine. EI is a wonderful product. It pays $543 a week for the first 119 days. Very simple. It's taxable. It covers a maximum of 55% of your income. Is $543 enough? Or is 55% of your income, which you still have to pay taxes on, going to be adequate? EI is not sufficient. It's merely a little bit to help you get by in short-term dilemmas. Understand that it only covers you for the first 120 days. Your hope is that you'll be back at work and you can dig yourself out of that hole. Remember that clients are recommended to have 3 months of savings put aside. So if you have 3 months of your expenses put aside in a savings account, EI will help you dip into less of it during the first 4 months. But it's not enough on its own. So our next answer becomes WSIB, sometimes referred to as Workers' Compensation Board. So WSIB is a wonderful product. It's going to pay 85% of your income to a max of $88,000 a year. Great. It's tax-free, even better. It goes on as long as you need it, even better. The problem is it only covers you against injuries that occur at work. You'll see my individual in the picture. He's got his helmet on and his boots, holding his knee. There's a lot of people standing around making sure you're wearing your appropriate attire, your appropriate equipment. You're following all the safety procedures at your place of work. At your home, helping friends, doing a side job, you're not protected in any way by WSIB. And it's very important to look after those things. You also have no protection against illness. Your group insurance does cover both of those things. Group insurance is a wonderful product, and we need to integrate with group. If your client has group, it is important to understand their group insurance before we add an individual disability product or a standalone individual disability product anyway. I will show you at the end of the presentation something we can offer people with group insurance. while we're trying to obtain the information about their group. So what other alternatives do we have? Aside from those in group insurance, the options our clients will come up with is, oh, I'd just borrow some money. There are no banks that finance the unemployed. If we're not sure when you're going back to work, the bank is absolutely not going to offer money. Borrow from friends and family might work for the first month. I hope your clients have obtained a lot of friends and have a very large family that they can continue to borrow off of, because in most people's world, by the time you get to the second or third month, sometimes your friends and family stop answering the phone. Refinancing the mortgage is another option that people will state. Well, many mortgages these days actually have built-in features or clauses that state if your financial situation changes, your mortgage becomes callable. So if you notify the bank that you're disabled, it's quite possible that that could initiate the foreclosure process unless you can find someone to co-sign on your existing mortgage. Dipping because your insurability or your eligibility for that mortgage has changed. Dipping into your savings is a wonderful solution. It does work. Hopefully your clients have adequate savings, because 1 year of disability will on average wipe out 10 years worth of savings. If the average duration of disability is almost 3 years, we need to ensure we've been saving for roughly 30 years. Hopefully your clients are not disabled until they're well into their 50s and they started saving in their 20s. Alternatively, the best option I can come up with is individual insurance. I'm not saying it's the only choice, but looking at all of the options out there, it's the only one I believe is actually viable. And we should at least make our clients aware and let them make the decision to proceed or not. So let's look at individual disability insurance. When we're talking about individual insurance, there's a few things we need to understand. What's the type of contract? What's the definition of disability in the contract? What happens if you're not totally disabled? Are there any riders available to personalize the insurance to our own needs? And what are the exceptions and the limitations? This is what really identifies product to product, the difference as to what's best. So there's 3 different major types of contract. There's non-cancelable contract, there's guaranteed contract with contractual definitions, contractual terms, guaranteed premiums. There's guaranteed renewable contracts, which have a guaranteed contract, contractual definitions and terms, and there's guaranteed renewable for simplified issue products, which have a guaranteed contract and guaranteed definitions, but some of the terms are not contractual. Okay? And this is a challenge. So when we look at the different contracts, my main product pillar series, which we'll be looking at, is a guaranteed renewable contract. Simplified accident is a step down from that product, is a simplified issue product. And as a matter of fact, the product I'm going to show you at the very end is actually a rider on a life contract, but it does have guaranteed premiums, contractual terms, and is a guaranteed contract. So it would be a non-cancelable, but it's actually sold under the life insurance license as a rider on the life product. So it's a little different than your standard DI as well. Talking about Pillar Series, to start things off, this is our newest product, just made available to WFG this year, starting in 2018. It's an income protection standard DI contract. It's a regular occupation definition for 24 months. Rider available for 5 years or until age 65. To be fair, all 3 of our products are a regular occupation for 24 months. They automatically become in any occupation thereafter. So initially we will cover you for your job for the first 24 months, and then we'll cover you for any job you are eligible to do by training or experience, by training, education, or experience. Under the Pillar Series, you're able to extend that regular occupation definition for 5 years or until age 65. Under the Simplified Pillar, you're able to extend it for 5 years, and under the DI Rider, there's no extension available. We offer first day hospitalization on Pillar Series and Simplified Accident on any waiting period of 120 or of under 120 days. So if your client has selected a 0-day, a 14-day, a 30-day, a 90-day waiting period, that's how long they have to wait. Is their elimination period before they receive benefits? We automatically make it a first day hospitalization benefit. The Pillar Series automatically includes a partial disability benefit. So if you're unable to do your job for your waiting period only, and then you want to transition back into work, we automatically include a feature called partial disability. If you're unable to work 50% of the time or unable to do one of the main duties of your job, we will pay you 50% of your benefits for 6 months while you're trying to get back into the swing of things. Both of our Pillar Series products, Pillar and Simplified Accident, also include total loss of autonomy, a lifetime benefit. What that means is if you're unable to perform all 6 activities of daily living, feeding, bathing, toileting, dressing, maintaining continence, and transferring, we will pay your benefits for as long as you live. Finally, on Pillar only, our fully underwritten product, there's no limitation whatsoever for soft tissue or for mental nervous disorder. What this means is back, shoulder, neck injuries. A Capitale can't force you to go back to work or find another job. For mental nervous disorder, this would be stress, anxiety, depression, probably the #1 sickness benefit. Has no exclusions or limitations under Pillar. These are very attractive features and not available with all disability products. Here's the input screen for Pillar. It's very simple. Just to try and highlight how simple things are, we can do client name, set, gender, smoking status, date of birth, or age. I recommend using date of birth, as some things depend on age last and some things depend on age nearest. There's an occupation class. Most people are unaware of what the occupation class is. It's basically, we've subcategorized every job you could possibly have into one of 6 categories. 4A is the highest class, 3A, 2A, A, B, and uninsurable. So those would be the 6 classes. Okay? Your clients are, and if you click on this little binoculars on our software, it'll open the occupation guide where you can hopefully find the occupation of your client. Sometimes the wording is not exactly the same as the title your client's given you, so you may need to search through the document in a little bit of detail. Potentially, I'm always available, as is our underwriting department, to try and assess an occupation class if you can't find it. We also have the ability to upgrade. Every occupation class under Pillar has the option for an upgrade with a few simple exceptions, and they're listed right here on this upgrade section. Annual income needs to go in, and then we ask your client if they have EI, if they're self-employed, or if they have workers' compensation. Once we're there, we can select Pillar Series, we can select Simplified Pillar, or we can select Safe Driver. Another product in our portfolio, a strong product, but not the topic of conversation today, as it's a very limited disability product. Once we come into DI, we've got accident-only DI. By default is what the plan is going to be. We've got an elimination period where you can select 0, 30, 90 days. If you indicated EI on the previous screen, 120 is available as well. You'll select a benefit period of 2 years, 5 years, or to age 65, and the monthly benefit, the maximum will be based on your income. You can select a lower amount than that. We've also got this section for additional coverage. If your client has EI, we understand that your client doesn't want to double up on coverage, so we'll automatically put their employment insurance benefit here with a 120-day wait and cover the balance of their eligibility in addition. If your client does not have EI and you select less than the full maximum benefit, you could put a secondary waiting period here with an additional coverage. The example I typically use is many of our clients can defer some of their bills but can't defer their groceries or their cash expenses. So let's look at a very short waiting period, example 0 days for say the first $1,000 and maybe a 90-day wait for the additional $3,000 to give our client a total $4,000 benefit. Why would we do that? To help try and keep the cost as low as possible. There's always a delicate balancing act between benefit and cost. Once we've selected our accident benefits, we can elect sickness benefits. Sickness is a rider on accident, and you cannot select a shorter waiting period or a higher benefit or longer benefit duration for sickness than you can for accident. Sickness is where the bulk of the cost comes in on the plan. So we're subsidizing the sickness cost with the accident cost. An accident must be included in order for you to access sickness. Okay. Regular occupation I mentioned. The regular occupation extension can be done for 5 years or to age 65 on Pillar. And it basically just means we cannot force you to select another job. I guess we could never force you, but we could cancel your benefits if you're able to do a different job that you're trained, educated, or experienced doing. With the regular occupation rider, you can just wait until you're able to go back to the job you had before. Indexation is another wonderful customization benefit. It basically provides your client with the ability to maintain the same buying power for the entire duration of their claim. It will automatically be indexed with the Consumer Price Index every year in October. We've also got a future insurability option. This is kind of like an indexation option before claim. Basically, if your income increases and you've elected the future insurability option, you're medically insured today for the future income you may have. All you have to do is provide income in the future, and we will enhance your benefits. We've also got a return of premium rider, and this is probably one of the best advantages with Le Capitale. Any client currently age 40 or under, this is where an age last identification is important. So someone who is still not yet turned 41 is eligible for 100% return of premium at age 65. It makes selling disability much easier when your clients who believe that it will never happen to them have the option of getting all of their money back if it doesn't. We have hospitalization riders as well, accident hospital and sickness hospital. This is daily cash should you be hospitalized. If you're hospitalized for an accident, we'll give you a daily benefit of somewhere between $40 and $150. Same for sickness. We also offer accidental fracture, which pays a lump sum in the event that you break a bone. If you break multiple bones, we will pay you for the most expensive bone on the list, which can be found in the software, in the illustration. There's also accidental death and dismemberment. In many cases, I find accidental death and dismemberment identifies that your client needs additional life insurance coverage, and we don't wind up with that rider. But there are absolutely circumstances where it is necessary. People working with large equipment, heavy machinery, dismemberment is a very real threat and is something that should be considered. Integration and coordination, this is what really makes the Le Capitale product attractive. At Le Capitale, you have the option of providing financials at time of application or at time of claim. And with a lot of companies, you have to do it at one or the other. On Pillar Series, you have the choice. If your client is purchasing $3,000 or less and is self-employed, or is an employee for someone else, all the way up to $4,000, they are not required to submit financials at time of application. Having said that, they would be required to submit them at time of claim if they don't at time of application. What Le Capitale does, quite simply, is we provide 6 months. Once your client submits a claim, or we will pay the full amount that was applied for, providing your client the time, the opportunity to collect or obtain and submit their financial evidence. This is a very unique feature with Le Capitale and is one of our biggest advantages. Your client receives their full benefits prior to submitting proof. At the end of 6 months, we will reduce the client's benefit down to $1,200 should they not provide proof. Or if their proof or if they wind up proving that their income should have been less, their disability income should have been less than acquired. The guaranteed floor on this contract is $1,200, and that'll go all the way to month 36. The beautiful feature here is it's a partial integration and partial coordination. What do we mean by that? We state it's only integrated with government benefits. It's only coordinated with government benefits. And we will pay up to 90% of your pre-disability income coordinated with government benefits. And if your government benefits cover more than your income, more than 90% of your income, we will still guaranteed pay out $1,200 a month, as long as your disability product was for higher than that. This is the highest available of any of the products available. From month 36 on, we do fully integrate and coordinate with other benefits, but by that time we've had more than ample time to collect information from your clients. For this reason here is the biggest advantage with Le Capitale. We have the last statistic I heard was we were 84% of our disability claims are paid within 7 days of receiving the claim. And it's simply because of that no integration or coordination. I've heard the average from other companies is about 4 months to pay the claim on average. So with Le Capitale, your clients receive their money when they need it, which is why they bought disability in the first place. It's very important to ensure your clients are getting what they expect. Here's our most recent application, is August 2017. Now, we still have applications dating back to December 2016 and actually to, I forget what the date is, May 2015. They're all still usable, but there may be additional questions that come back from underwriting if you manage to get your hands on an old application. This is the current one and the one you should be using. When we submit a fully underwritten application, there's some things we should be aware of. One, there is no product information anywhere in this application. You must attach an illustration to it. The illustration The premium in the illustration should match the premium you indicate in the application, and the application and illustration can be submitted by email to pillar, Pillar, .applications@lecapitale.com. We do not require a hard copy of the application. We do require you complete a hard copy as we don't have an electronic version at this time, but we will accept just a PDF, and we do not require you to send a hard copy. So it can be received same day at least. Now here's a challenge. This sometimes gets people's attention in the room. This is a very simple statement. This is how we present our clients to underwriting. This is how our clients present themselves to us when we meet them over the phone or we're talking to them somewhere before we get to know what they're actually like. Every client we talk to is the picture of perfect health until we find out otherwise. Sometimes we don't find out. We submit the evidence to underwriting. The underwriter writes to their doctor, writes to their nurse. It's forwarded to another doctor. We do a telephone interview. We learn additional information about the client. We see their blood, their urine. We find out that there's something found in either one of them. And our underwriter says, this isn't the client I'm talking to that you presented. This is the client I'm talking to. And what does this mean? It means we sometimes have an unusual conversation between the underwriter and the advisor, where we're looking at two very different people based on what was presented to us. And we as advisors cannot understand why the underwriter won't agree with our decision, won't agree that this is a healthy client. The simple statement, or what we've done, is we've offered a simplified product. The simplified product is for our clients that either we know right off the bat are not going to be eligible for coverage, or we offer the option from underwriting. You can apply for Pillar Series, are fully underwritten on that blue application for accident and sickness benefits for your client. No problem, all is good. We discover that there might be some health concerns for your client. The Capitale has the option to counteroffer an accident-only product due to your client's health. We don't want to offer sickness. They may have limitations. We can offer an accident-only product without any soft tissue limitations, still under Pillar Series. Alternatively, if your client is not eligible for that due to medical history, due to past disability history, due to injuries that have occurred previously, we can offer the simplified accident product. Your client only needs to be able to answer 3 questions, and Le Capitale is unique in the fact that we will automatically counteroffer our simplified product if your client is not eligible for the fully underwritten product. So it's in your best interest to do the fully underwritten product and allow us to counteroffer a lesser quality product if your client can't get the top end product. Comes down to what are those questions? Very simply, they only have to answer these 3 questions. Do you work 21 hours a week, 35 weeks a year? Are you a Canadian citizen, or do you have permanent resident or landed immigrant status? And do you have any limitations on your movements or daily activities due to an injury or another condition? If you answer yes, yes, no, you'll receive a simplified accident. There's a few differences between simplified accident. There's no medical exam necessary. It's available issue ages 18 to 69. Pillar Series was only available 18 to 59. Benefit period is 2 years, 5 years, or to age 70. So we can offer this to older clients. Benefits are payable as of the first day, with elimination periods of 14, 30, or 120 days available. Pillar offers all of those, but also a 90-day wait. It's guaranteed renewable to age 70 for clients that are continuing to work beyond 65. With an extension option for people who want to continue to work beyond 70, they can continue the coverage to age 75. The monthly benefits under Simplified Accident are $500 to $3,000. Under Pillar, they're $500 to $4,000. Under Simplified Pillar, we offer a 24/7 or a non-occupational coverage. So 24/7 is going to cover all day, 24 hours a day, 7 days a week. Non-occupational coverage is something people can use to wrap their workers' compensation or WSIB benefits. I'm covered at work, but I'd like some coverage if something happens elsewhere. Continues to offer a total loss of autonomy benefits, 100% of benefits for life if you're unable to feed, bathe, dress, toilet, transfer, and maintain continence. And it also has the no integration of benefits or coordination for 6 months and the guaranteed floor of $1,200 for the first 3 years. Those are all included. The integration is exactly the same. There's riders available on Simplified. There's not as many options as it is a simplified product. We do offer regular occupation extension, but it's only for 5 years. We continue to offer accidental death or dismemberment. We continue to offer partial disability. Partial is now a rider on Simplified, whereas on the fully underwritten product, it's a built-in included feature. And the fracture rider is also available on Simplified. This brings me to our third and final disability product. I know there's been a lot of information today, and I know I'm going very quickly, and I do apologize for that. But our third product is the DI Rider. It's a product that's included on our life insurance products. It's only available as a rider. It automatically includes accident and sickness benefits. It's coverage until a maximum of 65. It's available to issue between 18 and 60. And it automatically includes something called involuntary loss of employment. That one generally generates some interest. It's not included on any other product. Here's how it works. Involuntary loss of employment benefit is coverage in the event you lose your job. It's automatically included anytime you add the DI rider, and there's no cost associated with it. What it does, the rest of my slide didn't carry over. I'm guessing it's maybe in white text. What it does is it reimburses your premiums in the event of a loss of employment. If your client loses their job through no fault of their own, but they are let go, restructured, downsized, again, it's only available for employees because you cannot lose your job if you're self-employed. You are required to submit a record of employment to the Capitale, and we will reimburse your premiums for up to 5 months. Now, there's no requirement to tell us if you find a job earlier. So we can have clients that receive that. However, you are only entitled to one time on this benefit. If you have a client that habitually loses their job, they're very unlucky, and unfortunately they can only claim once, but it's better than anywhere else. Why is this such an attractive benefit? Because loss of job and loss of income is something that causes most clients to have loss of insurance. When we lose our job, most of our clients cancel our insurance. And the reason? Because they don't need to protect an income they don't have. They can't afford to protect an income they don't have. With this product, they get to retain their benefits while they're looking for work. Yes, they have to pay the premiums, but it will be reimbursed to them. So at least they're not out of pocket for long. Now, why is that important? If the loss of job lasts for a very long time, it can really be trying on an individual. It can cause stress. It can cause anxiety. It can cause depression. Well, if you recall, I referred to mental nervous disorder earlier as the #1 claim on a sickness benefit. Stress, anxiety, burnout, depression could actually trigger the claim on the disability benefit that your client was going to try to cancel because they lost their job. And that is why it's such an important feature. How does the DI benefit work? It's a level guaranteed premiums. The premiums are guaranteed. Its coverage period is 20, 25, or 30 years to a maximum of age 65. The benefits are payable for 2 years or 5 years, or until the expiry, that being 20 years, 25 years, 30 years. Okay? If your client is 43 at time of issue and you elect a 20-year benefit, benefits will be paid to age 63. If you elect a 25-year benefit, benefits will be payable until age 65. 65 is the maximum. There's a 30-day waiting period for accident on this product, no options available, and a 90-day waiting period for sickness. However, the 90-day sickness benefit is retroactive to day 30. What do we cover? Now, this is a little bit unique because under the disability rider, you can actually cover income, but you can cover debt as well. You can cover someone's mortgage, you can cover a renovation loan, you can cover their RV purchase or boat purchase, or I think those are called a spider, or a car. We can cover any number of different things. Here's a list. For credit insurance, and this is what we can use in a lot of circumstances for clients that already have group insurance. The statement is very simple. Group insurance typically covers a maximum of 2/3 of your income, and in many cases it's substantially less. Can our clients afford to live on 2/3 of their income or less? In many cases, our clients can't afford to live on their full income. But they could afford to live on 2/3 of their income if their mortgage was paid, or their rent was paid, or their child or spousal support was paid, or their renovation loan or consolidation loan, or their lease on their car. If any of those items were covered, they might be able to get by. And that's where the DI benefit can be utilized. If we're doing credit insurance, all we require is proof of the loan. We don't require information about your income. If we're doing rent, we require proof of the lease. If we're doing your support, we require proof through a court order. Or you're more than welcome to provide proof of income and information about all other in-force coverage, and we will treat it just like income protection, just like traditional disability. The disability income benefit has options, and that's what's so valuable about it. For mortgage insurance, credit insurance, we'll do a maximum of $2,000 a month, regardless of any other coverage. I don't care if you have group insurance, I don't care if you have individual disability, it's irrelevant. We'll cover up to $2,000 as long as you can provide proof of debt. We will cover up to a maximum of the amount of the debt, or $2,000, whichever is lower. How do we calculate it? For a loan, it's monthly reimbursement of the principal on your mortgage, the interest on your mortgage, and your property taxes. For a line of credit, it's 1% of the outstanding balance used plus taxes. That's assuming it's a home equity line of credit. What's so attractive about this product? We can go through lots of features, but the most attractive is at time of claim, the benefits are in no way integrated with any other benefits. There is no proof of income required. There is no proof of loan required. You'll see I have an asterisk there. It's because a little over a year ago, we were asked to try and let people purchase this product without submitting proof at time of application. And we didn't like it, but we started listening to the reasoning. In many cases, people will be purchasing a home. They want to get the insurance in place, but their closing date isn't for a few months away. So people are more than welcome to apply for the insurance, submit the requested amount of disability rider, indicate that it's based on a loan, and they can submit the proof at time of claim. Having said that, I recommend that people submit it as soon as it's available. We'll let you do it for 6 months from the date of issue without requiring it at time of claim. The beautiful thing about this product, it can be used to compete against bank insurance in a fantastic form because you're proving everything at time of application to guarantee your eligibility at time of claim. There's no details at time of claim with the exception of the information from your doctor verifying that you're unable to do your most recent job. That's a very quick, simple, maybe a little bit more detailed than expected, overview of the Capitale disability portfolio. Thank you. Now maybe if you want to call me, we can take some questions.